Now, on a special request, we are first completing Unit 3 of International Trade, that is trade negotiation. Post that, we will continue our series for since the exams are due. So, I will try to complete Unit 3 and Unit 4 first. So, here we have Unit Overview International Trade, in which we will be covering trade negotiations which have RTAs, GATT, and WTO. Introduction. The recent years have seen intense bilateral and multilateral negotiations among different nations in the international arena. India, for example, have already become part of 19 such concluded agreements and is currently negotiating more than 2 dozen of such proposals. Major events in the year 2020, such as Britain's exit from the European Union, the new trade agreement, which is successor of the North American Free Trade Agreement NAFTA, concluded between Canada, Mexico, and United States, namely US-Mexico-Canada Agreement, also known as USMCA, and many other unpredictable developments in the trade front due to trade wars between US and China and the global pandemic make trade negotiations a highly relevant area of study. So, national governments are not the sole stakeholders in a trade negotiations. Many interest groups, lobbying groups, pressure groups, and non-governmental organizations (NGOs) exert their influence on the process. सभी का कुछ न कुछ influence रहता है. As anyone can guess, the position taken by each of the negotiating power will represent their underlying agenda of interest. For example, in trade negotiations, where one of the parties seem to be bargaining for market access through reduction in tariff, the others may be clamoring on the issue of possible grant of protection to domestic industries. Before we go into the discussion on multilateral trade negotiations and the related institutions, it is relevant to understand the nature of the regional as well as the free trade agreements which evolve through negotiations. Then comes 3.2 Taxonomy of Regional Trade Agreements (RTAs). Regional trade agreements are defined as group of countries not necessarily belong to the same geographical region, which are formed with the objective of reducing barriers to trade between member countries. In other words, a regional trade agreement (RTA) is a treaty between two or more governments that define the rule of trade for all signatories. As on 1st Feb 2021, 339 RTAs were in force. Mark this. Trade negotiations result in different types of agreements which are shown in the chart below. Type of trade agreements. Just I will make a stack. Unilateral trade agreements, bilateral trade agreements, regional preferential trade agreements, trading bloc, custom union, common markets, economic and monetary union. So we have some brief on each of this. Unilateral trade agreements, under which an importing country offers trade incentive in order to encourage the exporting country to engage in international economic activities that will improve the exporting country's economy. Example, generalized system of preferences. Second comes bilateral agreements. These are agreements that set rules of trade between two countries, two blocks, or a block and a country. These may be limited to certain goods and services or certain types of market entry barriers. Example, European Union and South Africa Free Trade Agreement, ASEAN and India Free Trade Agreement. Then we have third one, regional preferential trade agreements among a group of countries reduces trade barriers on a reciprocal and preferential basis only for only the members of the group. Only the specific members will have some benefits. Example, global system of trade preferences among developing countries. Mark this. GSTP. Fourth comes trading bloc. It has a group of countries that have a free trade agreement between themselves and may apply a common external tariff to other countries. Example, Arab League AL European Free Trade Agreement Association EFTA. Then we have fifth one, Free Trade Area is a group of countries that eliminate all tariffs and coast barriers on trade with the objective of increasing exchange of goods with each other. The trade among the member states flow tariff free means no taxes, but the member states shall maintain their own distinct external tariff with respect to imports from the rest of the world. In other words, the member retain independence in determining their tariff with non-members. Means they can charge from the non-member. Example, the Asian India Free Trade Agreement is a free trade area among the 10 members states of the Association of Southeast Asian Nations, ASEAN also known as, and India. It came into force on 1st August 2005. Then we have sixth one, a customs union is a group of countries that eliminate all tariffs on trade among themselves but maintain a common external tariff on trade with countries outside the union, just like earlier one. Thus, technically violating MFN. The common external tariff, which distinguishes a customs union from a free trade area, implies that generally the same tariff is charged wherever a member import goods from outside the custom union. The European Union is a custom union. Its 27 member countries form a single territory for custom purpose. Other examples are Gulf Cooperation Council GCC, South Common Market, MER, Mercosur. Then we have seventh one, Common Market. A common market depends a custom union by providing for the free flow of output and of other factors of production, that is labor, capital and other productive resources, by reducing or eliminating internal tariffs on goods and by creating a common set of external tariffs. The member countries attempt to harmonize some institutional arrangement and commercial and financial laws and regulating among themselves. There are also common barriers against non-members. That is example European Union, ASEAN. Then we have economic and monetary union. For a common market, the free transit of goods and services through the border increases the need of foreign exchange operations and results in higher financial and administrative expenses of firms operating within the region. The next stage in the integration sequence is formation of some form of monetary union. In the economic and monetary union, the members share a common currency. Adoption of common currency also makes it necessary to have a strong convergence in the macroeconomic principles. For example, the European Union countries implement and adopt a single currency. There have been significant growth in international trade since the end of the Second World War, mostly due to the multilateral trade system, in which both a political process and a set of political institutions. It is a political process because it is based on negotiations and bargaining among sovereign governments, based on which they arrive at rules governing trade between or among themselves. The political institutions that facilitate trade negotiations and support international trade cooperations by providing the rules of the game that have been former GATT, that is General Agreements on Trade and Tariff, and WTO. Then we have the General Agreement on Tariff and Trade, GATT. The General Agreement on Tariff and Trade, GATT, covers international trade in goods. The working of the GATT agreements are the responsibility of the Council for Trade in Goods, that is Goods Council, which is made up of a representative from all the WTO member countries. The Goods Council have 10 committees dealing with specific subjects such as agriculture, market access, subsidies, anti-dumping measures, and so on. Again, these committees consist of all member countries. Also, reporting to the Goods Council are a working party on state trading enterprise and the Information Technology Agreement ITA committee. The GATT lost its relevance by the 1980s because it was obsolete. The fast evolving contemporary complex world trade scenario characterized by emerging globalization means complexity is been evolving. Second, international investments have expanded substantially. Third, intellectual property rights and trade in services were not covered by GATT. Fourth, world merchandise trade increased by leaps and bounds and was beyond its scope. Fifth, the ambiguities in the multilateral system could be heavily exploited, and exports efforts at liberalizing agriculture trade were not successful. And two more, there were inadequacies in institutional structure and the dispute settlement system. And last, it was not a treaty, and therefore terms of GATT were binding only insofar as they are not coherent with the nation's domestic rules. Then comes the Uruguay round and the establishment of WTO. The need for a formal international organization which is more powerful and comprehensive was felt by many countries in the late 1980s. Having settled the most ambiguous negotiating agenda that covered virtually every outstanding trade policy issues, the Uruguay round brought among the biggest reform on the world trading system. Members established 15 groups to work on limiting restrictions in the area of tariffs, non tariff barriers, tropical products, natural resource products, textiles and clothing, agriculture, safeguards against sudden surge in imports, subsidies, countervailing duties, trade related intellectual property restrictions, trade related investment restrictions, services, and four other areas dealing with the GATT itself, such as the GATT system, dispute system procedures, and implementation of the NTB codes of the Tokyo round, especially on anti dumping duties. The round started in Punta de Este. This is a place in Uruguay in September 1996 and was scheduled to be completed by December 1990. See, means there are 4 years approx. However, due to many differences and especially due to heated controversies over agriculture, no consensus was arrived. मतलब कुछ final decision नहीं हुआ. Finally, in December 1993, the Uruguay round, the eighth and the most ambiguous and largest ever round of multilateral trade negotiations, in which 123 countries were participated, was completed after 7 years of elaborate negotiations. The agreement was signed by most countries on April 15, 1994 and took effect on July 1st, 1995. It also marked the birth of the WTO, World Trade Organization, which is the single institutional framework encompassing the GATT as modified by the Uruguay round. The WTO, the World Trade Organization. The WTO is the only global international organization dealing with the rules of trade between nations. As its heart are the WTO agreements negotiated and signed by the bulk of the world's trading nations and ratified in their parliaments. The goal is to ensure that trade flows as smoothly, predictably, and freely as possible. The principal objective of the WTO is to facilitate the flow of international trade smoothly, freely, fairly, and predictably. So here are objectives of WTO. It has 6 objectives. First, to set and enforce rules for the international trade, to provide a forum for negotiating and monitoring further trade liberalization, to resolve trade dispute, to increase the transparency of decision making process, to cooperate with other major international economic institutions involved in global economic management, and to help developing countries benefit fully from the global trading system. The objectives of the WTO agreement as acknowledged in the preamble of the agreement creating the World Trade Organization, including raising standards of living, ensuring full employment, and a large and steadily growing volume of real income and effective demand, and expanding the production of and trade in goods and service. The WTO, whose primary purpose is to open trade for the benefit of all, does its function by acting as a forum of trade, negotiating among member governments, administering trade agreements, reviewing national trade policies, assisting developing countries in trade policy issues through technical assistance and training programs, and cooperating with other international trade organizations. The structure of the WTO. The WTO activities are supported by a secretariat located in Geneva, headed by a Director General. It has a three-tier system of decision making. The WTO's top-level decision-making body is the Ministerial Conference, which can take decisions on all matters under any of the multilateral trade agreements. The Ministerial Conference meets at least once every 2 years. The next level is the General Council, which meets several times a year at the Geneva headquarters. The General Council also meets as the trade policy review body and the dispute settlement body. The next level, the Goods Council, Service Council, and the Intellectual Property, that is TRIPS Council, report to the General Council. These councils are responsible for overseeing the implementation of the WTO agreements in their respective area of specialization. The WTO Secretariat maintains working relationship with almost 200 international organizations in activities ranging from statistics, research, standard setting, and technical assistance and training. Numerous specialized committees, working groups, and working parties deal with the individual agreements and other areas such as environment, development, membership application, and regional trade agreements. The WTO accounts for about 95% of world trade, currently has 164 members, of which 117 are developing countries or separate custom territories. Around 24 others are negotiating membership. The WTO's agreements have been ratified in all member parliaments. Then the guiding principles of WTO. Right from its inception, the WTO has been driven by a number of fundamental principles which are the foundation of the multilateral trading system. Following are the major guiding principles. Trade without discrimination. First, most favored nation MFN, treating other people equally. Under the WTO agreements, countries cannot normally discriminate between their trading partners. Grant someone a special favor such as lower custom duty of one of their products and you have to do same for all other customers. मतलब सबको इक्वल ये देंगे. आप पार्शलिटी या कुछ ये नहीं कर सकते कि किसी को रेट कम ये अप्लाई किया है किसी को ज़्यादा अप्लाई किया. मान लो आप कुछ ये पेन आप किसी को सेल कर रहे हो से XYZ कंट्रीज़ को, आपने उसको 10% टैक्स चार्ज किया है, वही आप किसी और को कर रहे हो 5% में, तो ऐसा नहीं कर सकते हो. आपको सबको सेम रखना है. The principle is known as the most favored nation treatment C box. It is also important that in it is the first article of GATT which governs trade in goods. MFM is also a priority in the GATT's, that is General Agreement on Tariff in Service Article 2 and the Agreement on Trade Related Aspect of IPRs, that is TRIPS Article 4. Although in each agreement the principle is handled significantly different. Together, those three agreements covered all three main areas of trade handled by the WTO. Some exceptions are मतलब कुछ जगह आप exception रहता है. For example, countries can set up a free trade agreement that applies only to goods traded within the group, discriminating against goods from outside, or they can give developing countries special access to their market. Or a country can raise barriers against products that are considered to be traded unfairly among specific countries, and in services countries are allowed in limited circumstances to discriminate. मतलब कुछ जगह हम ये कर सकते हैं, बट द एग्रीमेंट्स ओनली परमिट दिस एक्सेप्शंस अंडर स्ट्रिक्ट कंडीशन, कुछ कंडीशंस है. In general, MFN means that every time a country lowers the trade barriers or opens up the market, it has to do so for the same goods and service from all its trading partners, whether rich or poor, weak or strong. मतलब कुछ स्पेसिफिक एक्सेप्शन छोड़ दिया, तो अगर कुछ मान लो कुछ चेंज कर रहे हो तो सभी के लिए सेम चाहिए, वो उधर डिस्क्रिमिनेशन नहीं चलेगा. फिर आता है नेशनल ट्रीटमेंट, सेकेंड वन. Treating foreigners and local equally important, and local produced goods should be treated equally, at least after the foreign goods have entered the market. The same should apply to foreign and domestic services, and to foreign and local trademarks, copyrights, and patents. The principle of national treatment gives other the same treatment as its own nation is also found in all the three main WTO agreements, that is Article 3 of GATT, Article 17 of GATS, and Article 3 of TRIPS. ये तीन एग्रीमेंट, गैट, गैट्स और ट्रिप्स. although one again the principle is handled significantly different in हर जगह पे थोड़ा सा कुछ डिफरेंस है. National treatment only applies once a product, service or item of intellectual property has entered the market. Therefore, charging custom duty on an import is not a violation of national treatment, even if locally produced products are not charged as equivalent tax. That is overview of the WTO agreements. Freer trade, that is gradually through negotiations. Lowering trade barriers is one of the most obvious means of encouraging trade. The barriers concerned include custom duties or tariffs, and measures such as import bans or quotas that restrict quantities selectively. From time to time, other issues such as red tape and exchange rate policies have also been discussed. The WTO agreements allow countries to introduce changes gradually through progressive regulation. Developing countries are usually given longer to fulfill their obligation. Predictability through binding and transparency. Sometimes promising not to raise up trade barriers can be as important as lowering one, because the promise gives businesses a clearer view for their future opportunities. With stability and predictability, investment is encouraged, jobs are created, and consumers can enjoy full benefits of competition, choice, and lower prices. In the WTO, when countries agree to open their markets for goods and services, they bind their commitment. For goods, these binding amount to ceiling on custom tariff rates. Sometimes countries tax import rates that are lower than the bound rates. Frequently, this is the case in developing countries. In developed countries, the rates actually charged and the bound rates tends to be same. A country can change its binding, but only after negotiating with its trading partners, which could also mean compensating them for loss of trade. One of the achievements of the EU round of multilateral trade talks was to increase the amount of trade under binding commitments. In agriculture, 100% of product are now bound tariff. The result of all these is substantially high degree of market security for traders and investors. The system tries to improve predictability and stability in other ways as well. One way is to discourage the use of quota and other measures used to set limits on quantities of import. That is, administering quotas can lead to more red tape and acquisitions of unfair trade. Many WTO agreements require governments to disclose their policy and practices publicly within the country or by notifying the WTO. The regular surveillance of national trade policies through the Trade Policy Review Mechanism provides a further means of encouraging transparency both domestically and at the multilateral level. Then we have promoting fair competition. The WTO is sometimes described as a free trade institutions, but that is not entirely accurate. The system does not allow tariff and in limited circumstances other forms of protection. More accurately, it is a system of rules dedicated to open, fair, and undistorted competition. The rules on non-discrimination (MFM) and national treatment are designed to secure fair conditions of trade. So, two are those on dumping, that is exporting at below cost to gain market share and subsidies. The issues are complex and the rules try to establish what is fair or not unfair and how governments can respond, in particular by charging additional or import duties calculated to compensate for damage caused by unfair trade. इसका मतलब क्या है, मैं एक शॉर्ट में समझाता हूँ कि ए प्रोडक्ट ए जिसका कॉस्ट है 80 रुपीज़, इसका प्रॉफिट है 20 रुपीज़, मतलब इसका सेलिंग प्राइस है 100 रुपीज़। तो यहाँ पे गवर्नमेंट क्या बोलता है कि आप ये प्रोडक्ट को आप बाहर एक्सपोर्ट करो तो हम आपको 20 रुपीज़ इंसेंटिव देंगे, इंसेंटिव 20 रुपीज़ देंगे। सो इनडायरेक्टली इसका कॉस्ट हो जाएगा 80 रुपीज़ फॉर देम सेलिंग प्राइस, क्योंकि गवर्नमेंट 20 रुपीज़ उनका बेयर कर रहा है। तो ये प्रोडक्ट मान लो ये कंट्री एक्स ने कंट्री वाई को बेचा है और कंट्री वाई में फिर कंट्री वाई का नॉर्मल कॉस्ट रहता है, फॉर नॉर्मल प्रोडक्ट उनका कॉस्ट है 100 रुपीज़ और प्रॉफिट है 20 रुपीज़ और सेलिंग प्राइस है 120। पर सिंस उनको रेडीमेड 80 रुपीज़ में मिल रहा है तो वो क्या करेंगे, 80 जो कि इम्पोर्टेड कॉस्ट है प्लस 20 रुपीज़ प्रॉफिट यानी 100, वो 100 रुपीज़ में सेल करेंगे मार्केट में। इससे क्या होगा, जो हमारा लोकल प्लेयर है जिसका 120 रुपीज़ प्राइस है उसका नुकसान होगा। तो ये नुकसान बचाने के लिए गवर्नमेंट क्या करता है, कुछ एडिशनल इंपोर्ट ड्यूटी लगाता है और एडिशनल इंपोर्ट ड्यूटी का अमाउंट, आईडी का अमाउंट विल बी इक्वल टू जो कि डिफरेंस इन प्राइस है, मतलब जो 120 माइनस नए वाला प्राइस 100, यानी अप्रॉक्सीमेटली 20 रुपीज़ का एडिशनल टैक्स लगाता है, जिसके कारण इम्पोर्टेड गुड्स का वैल्यू और अपना लोकल गुड्स का वैल्यू सेम होता है और इससे जो डोमेस्टिक इंडस्ट्री है उसको नुकसान नहीं मिलता है। तो होप सो एक शॉर्ट एग्जांपल आपको कुछ बेनिफिट करेगा। फिर आते मेनी ऑफ द अदर WTO एग्रीमेंट्स एम्स टू सपोर्ट फेयर कंपटीशन इन एग्रीकल्चर, intellectual property, service. For example, the agreement on government procurement, a plurilateral agreement because it is signed off only a few WTO members, कुछ लोगों मिलके, extends competition rules to purchase of by thousands of government entities in many countries and so on. फिर है encouraging development and economic reform. The WTO system contributes to development. On the one other hand, developing countries need flexibility in the time they take to implement the system agreements, and the agreements themselves inherit the earlier provisions of GATT that allows for special assistance and trade concessions for trading developing countries. Over 3 quarters, एक क्वार्टर यानी कितना मंथ्स कमेंट करना, of WTO agreements are developing countries and countries in transit to market economies. During the 7.5 years of the Uruguay round, over 60 of these countries implemented trade regulation programs autonomously, मतलब खुद से ही. At the same time, developing countries and transition economies were much more active and influential in the Uruguay round negotiations than any previous round, and they are even more so in the current Doha round development agenda. At the end of the round, developing countries were prepared to take on the most of the obligations they are required for developed countries. But the agreements did give them transition period, मतलब कुछ period जब transit करना है, to adjust to the more unfamiliar and perhaps difficult WTO provisions, particularly so for the poorest, least developed countries. A ministerial decision adopted at the end of the round says better off countries should accelerate implementing market access commitments on goods exported by the least developed countries, and it seek increased technical assistance for them. More recently, developed countries have started to allow duty-free and quota-free imports for almost all products from least developed countries. मतलब जो भी लीस्ट डेवलप कंट्रीज है उनको सपोर्ट करने के लिए कुछ प्रोविजंस ये इम्प्लीमेंट करने के लिए कहा है यहाँ पे। मतलब ड्यूटी फ्री उनको टैक्स नहीं लगेगा इंपोर्ट करने के लिए। लीस्ट डेवलप्ड कंट्री है, मतलब यहाँ पे डेवलपमेंट बहुत कम है, तो उनका इकोनॉमी कैसे सस्टेन करेगा, उसके लिए जो डेवलप्ड या डेवलपिंग कंट्रीज है उन्होंने कुछ टैक्सेस न लगा के या फिर कुछ टाइप से उनको हेल्प करना है उनके इकोनॉमी को ग्रो कराने के लिए। On all of these, the WTO and its members are still going through a learning process. The current Doha Development Agenda includes the developing countries' concern about the difficulty they face in implementing the Uruguay round agreements. Now, there comes WTO agreements. So the WTO agreements cover goods, services, and intellectual properties and the permitted exceptions. These agreements are often called the WTO's trade rules, and the WTO is often described as rule based or systematic based on rules. These rules are actually agreements that are governments negotiated. So, following are the important agreements under WTO. Since a thorough discussion on the features of each agreement is beyond the scope of this unit, only the major provisions are given below. First, Agreement on Agriculture aims at strengthening GATT disciplines and improves agriculture trade. It includes specific and binding committees made by the WTO member governments in the three areas of market access, domestic support, and export subsidies. Then comes agreement on the application of sanitary and psychosanitary measures. Establishes multilateral framework for the planning, adoption, and implementation of sanitary and phytosanitary measures to prevent such measures from being used for arbitrary or unjustified discrimination or for camouflaged restraint on international trade and to minimize their adverse effect on trade. Third, agreement on textiles and clothing replaced the multi-fiber agreement MFA, which was prevalent since 1974 and entitles import protection policies. ATC provides the textile trade should be deregulated by gradually integrating it into GATT disciplines over a 10-year transition period. So, in the 10 years, it will be transited. Then comes agreement on technical barriers to trade (TBT). It aims to prevent standards and confirmatory assessment systems from becoming unnecessary trade barriers by securing their transparency and harmonization with international trade. Often, excessive standards or misuse of standards in respect of manufacturing goods and safety or environmental regulations act as a trade barriers. Then comes agreement on trade-related investment measures (TRIMS). It expands disciplines governing investment measures in relation to cross-border investment. It stipulates that countries receiving foreign investment shall not impose investment measures such as requirement, conditions, and restrictions inconsistent with the provisions of the principle of national treatment and general elimination of quantitative restrictions. For example, measures such as local content requirement and trade balancing requirement should not be applied on investing corporations. Then comes anti-dumping agreements seeks to tighten and codify disciplines for calculating dumping margins and conducting dumping investigations, etc., in order to prevent anti-dumping measures from being abused or misused to protect domestic industries. Just I shared the example earlier. Then comes custom valuation agreements. It specifies rules for more consistent and reliable custom valuations and aims to harmonize custom valuation system on an international basis by eliminating arbitrary valuation system. Then we have agreement on pre-shipment inspection (PSI), which intends to secure transparency of pre-shipment inspection, wherein a company designated by the importing country conducts inspection on the quality, volume, price, tariff classification, custom valuation of the merchandise in the territory of the exporting country on behalf of the importing country's custom office and issues certificate. Means a third party will be assigned which will do all this part on behalf of the country. The agreement also provides for a mechanism for the solution of disputes between visa agency and exporter. Then we have agreement on rules of origin, which provides for the harmonization of rules of origin for application to all non-preferential commercial policy instruments. It also provides for dispute settlement procedures and creates the rule of origin committee. Agreement on import licensing procedures relates to simplification of administrative processes and to ensure their fair operation so that import licensing procedures of different countries may not act as trade barriers. Agreement on subsidies and countervailing measures aims to clarify definitions of subsidies, strengthen discipline by subsidy type, and to strengthen and clarify procedure for adopting countervailing tariffs. Agreements on safeguarding clarify disciplines for requirements and procedures for imposing safeguard and rated measures, which are emergency measures to restrict imports in the event of a sudden surge in imports. Then, General Agreements on Trade in Services (GATS). This agreement provides the general obligation regarding trade in service, such as most favored nation treatment and transparency. In addition, it enumerates service sectors and stimulates that in the service sector for which it has made commitments, a member country cannot maintain or introduce market access restrictions measures and discrimination measures that are severe than those that are committed during the negotiations. Then we have number 14, agreement on trade related aspect of international property rights (TRIPS). This agreement stipulates most favored nation treatment and national treatment for intellectual properties such as copyright, trademark, geographical indication, industrial design, patents, IC layout designs, and undisclosed information. In addition, it requires member countries to maintain high level of intellectual property protection and to administer a system of enforcement of such rights. It also stipulates procedures for the settlement of disputes related to agreement. Then comes Trade Policy Review Mechanism (TPRM), which provides the procedures for the Trade Policy Review Mechanism to conduct periodical review of member state trade policies and practices conducted by the Trade Policy Review Board (TPRB). Then we have number 16, plurilateral trade agreements. So, multilateral negotiations are those negotiations involving the entire WTO contracting parties. The plurilateral trade agreements involve several countries with a common interest, but it does not involve all WTO countries. Not all the plurilateral agreements are negotiated within the WTO framework. All of the above mentioned agreements entered into by the members are not static, means dynamic है, वो change हो सकता है. They are renegotiated from time to time and new agreements evolve from negotiations. Example, many agreements were negotiated under the Doha Development Agenda launched by WTO trade ministers in Doha, Qatar in November 2001. Then we have the Doha Round. So the Doha Round, formerly known as the Doha Development Agenda, which is the 9th round since the Second World War, was officially launched at the WTO's 4th Ministerial Conference in Doha, Qatar in November 2001. The round seeks to accomplish major modifications of the international trading system through lower trade barriers and revised trade rules. The negotiations include 20 areas of trade, including agriculture, service trade, market access for non-agriculture products (NAMA), NAMA, trade in services, trade facilitations, environment, geographical indications, and several international property issues. The most controversial topic in the Doha agenda was agricultural trade. Controversial. Then we have 3.7, G20 economies facilitating trade. While some trade restrictive measures have been lifted by G20 measures, the report indicates that the trend has been going in the wrong direction. Export restrictions contribute to shortage, price volatility, and uncertainties. G20 economies must bound on their collective pledge from the 12th Ministerial Conference and shall demonstrate leadership to keep their market open and predictable so that food and fertilizer in particular can flow to where they are needed, said WTO Director General Nosgi Okenzo who will be attending the G20 Leaders Summit in Bali, Indonesia on 15-16 November. In case I might be pronouncing it wrong, kindly bear me on that. The report indicates that supply chains on the whole have thus far proven to be resilient despite the war in Ukraine, the continuing impact of the COVID-19 pandemic, the highest inflation many countries have experienced in decades, and the impact of monetary tightening by central banks seeking to limit price increase. That said, specific industries and regions have been differently impacted. Overall, the pace of implementing of new export restrictions by WTO major members have increased since 2020, first in the context of the pandemic and subsequently within the war in Ukraine and food crisis. Some of these export restrictions have been gradually lifted, but several still remains in place. As of mid-October 2022, WTO members still have in place 52 export restrictions on food, feed, feed and fertilizer, in addition to 27 export restrictions on product essentials to combat COVID-19. Of these, 44 of the export restrictions on food, feed and fertilizer, 63% of the pandemic-related export restrictions were maintained by G20 economies. During the review period, G20 economies introduced 66 new trade facilitating measures covering trade worth rupees US dollars 451.8 billion and 47 ट्रेड restrictive measures. ये फैसिलिटी मतलब उसको बूस्ट करने के लिए, रिस्ट्रिक्ट करने के लिए मतलब रिस्ट्रिक्टिव on goods with a coverage of $160.1 billion. These measures are not related to the pandemic. At the same time, the accumulated stockpile of G20 import restrictions continued to grow. By mid-October, 11.6% of G20 imports were affected by trade restricting measures. तो जिससे ट्रेड रिस्ट्रिक्ट हो रहा है, implemented since 2009 and still in force. Initiations of trade remedy investigations by G20 economies declined sharply during the review period. 70 initiations after the peak in 2020. That was the highest since the beginning of the trade monitoring exercise in 2009. Anti-dumping measures continued to be the most frequently traded remedies action in terms of initiations and terminations. Similarly, the implementation of new COVID-19 related trade measures by G20 economies decelerated over the past 5 months with 4 new such measures recorded on goods and 1 on service. The number of new COVID-19 related support measures to mitigate the social and economic impact on the pandemic also fell sharply over the past 5 months. Since the beginning of the pandemic, 2001 COVID-19 trade and trade-related measures in goods were implemented by G20 economies. Most, 61%, were trade facilitating, while the rest 39% could be considered as trade restrictive. मतलब इससे ट्रेड बूस्ट हो रहा है 61% से, बाकी से रेस्ट्रिक्ट हो रहा है. G20 economies also continued to phase out pandemic-related import and export measures. By mid-October 2022, 77% of export restrictions have been repealed, leaving 17 restrictions in place. Although the number of the pandemic-related trade restrictions in place decreased, their trade coverage remains significant at USD 122 billion. The WTO trade monitoring reports have been prepared by the WTO Secretariat since 2009. G20 members are Argentina, Australia, Brazil, Canada, China, the European Union, France, Germany, India, Indonesia, Italy, Japan, the Republic of Korea, Mexico, the Russian Federation, Saudi Arabia, South Africa, Turkey, the United Kingdom, and the US. So here comes the end of this chapter. Kindly bear me if my voice is little lower, and also bear me if I pronounce some of the words wrongly. So best of the luck for the upcoming exams, and see you in the next video. Bye bye.